Do you think that investors are too sanguine about what's going on right now in Washington?
Well, you know, as Mike McKee just said, this is the 19th time we've gone through this, so we've seen this movie before. I think the Rolling Stones sung about 19th Nervous Breakdown about 40 years ago. So, but I think that you know, the view is that this is, unfortunately, politics as usual in Washington.
Is it, though?
Yeah, well, I think it is. I think we've seen these before. You know, the parties have changed, the names have changed, the positions have changed. But I don't think it's really all that, you know, we've come to a situation where they don't, I almost think they don't like doing these budgets because the minority thinks that the only time they can really get some influence on policy is when they hold the government operations hostage to these continuing resolutions. And if you actually do a budget when you're supposed to in October, then you go the whole year, you don't have these continuing resolutions for these confrontations. And I think that's what we're seeing right now, is that, you know, the minority party is attempting to use this in negotiations to try to get something that they really think is important. So, unfortunately, we've seen this before, and, you know, as Mike said, I think until we get to the debt ceiling, it's not that big an issue for domestic investors.
So, Bob, the stock market's not reacting, the bond market's not reacting, but often where you see political reaction is actually in FX.
Yep.
So let's talk about the dollar. We'll put up a bar chart here about the dollar's doing. It had obviously a very tough year last year, down about 10%, and it's down so far this year. Is the dollar reacting to some extent to this political shenanigans, if I can call it that, in Washington?
I think it is. You know, we often think of the dollar in cyclical terms. You know, we talk about interest rate differentials and growth differentials and things like that. And on that basis, you know, the dollar shouldn't be all this weak. I think what we're seeing, though, is this is one time where there's a structural situation that's hitting the dollar. The U.S. continues to run a large current account deficit and trade deficit. And one of the thoughts at this point in the cycle was that with the U.S. virtually eliminating its deficit on petroleum products, we'd be seeing much closer to a balanced trade situation, and we'd see the current account shrinking. It's not happening. And at the same time, what we're seeing is a lot of U.S. investors diversifying into foreign markets. So you're actually seeing capital outflow at the same time we have a current account deficit. That's a tough structural environment for the dollar.